Hi, this is Ken. Tesla is not in a simple bull or bear phase right now, and that is exactly why this earnings report matters so much. Going into this quarter, we have a mix of signals. California registration numbers look weak. Europe is seeing Model Y price increases. Cybertruck is dealing with charging related concerns. And Robotaxi and FSD are still shaping the long term story. So today, I want to look at what these headlines really mean and what long term Tesla investors should actually focus on. Let's start with the biggest story Q1 2026 earnings. At this stage, Tesla earnings are not just about whether revenue or EPS comes in above or below expectations. Of course, the numbers matter, but what matters even more is what management says on the call. That is where sentiment can really shift. Tesla is not being judged like a normal car company anymore. Investors are listening for signals about Robotaxi, FSD, margins, product priorities, and where Tesla is putting its energy next. So the bigger question is not just how was the quarter, it is what kind of company is Tesla becoming. If the numbers are soft, but the direction is clear, the market may stay patient. But if the numbers disappoint and the message is unclear, that is when pressure can build quickly. Now let's talk about California. The reported drop in Tesla registrations there is clearly a negative headline. California is one of Tesla's most important EV markets. So when numbers weaken there, investors pay attention. But I do think this needs context. The EV market overall is under pressure. Higher interest rates, softer consumer demand, and changing incentives are making the environment tougher. So yes, Tesla is being affected, but Tesla is not the only one facing a slowdown. To me, this looks less like demand has completely broken and more like Tesla is taking the hit of being the biggest EV player in a weaker market. That is still important, but it is different from saying the Tesla story itself is broken. That is also why Europe matters here, because while California is sending a bearish signal, Tesla has also raised Model Y prices in parts of Europe, including Germany, France, and Norway. And I think that matters more than people realize. A company usually does not raise prices in a market where demand is falling apart. It does not mean Europe is suddenly perfect, but it does suggest Tesla's situation is not uniformly weak across all regions. This is one of the biggest mistakes people make when analyzing Tesla. They try to force one global narrative. Tesla is strong or Tesla is weak, but the real picture is more uneven than that. So when I look at California weakness and European price increases together, I do not see a contradiction. I see a company navigating very different regional conditions at the same time. Next, let's talk about Cybertruck. The reported PCS issue affecting AC charging is not a small detail. Charging reliability matters because it directly affects daily usability. Tesla, offering free supercharging as a temporary solution, may help owners in the short term, but it does not solve the root problem. And this is where hardware issues matter. Tesla is very good at moving quickly with software, but hardware problems are different. They test manufacturing quality, service response, and customer trust. And with a product as visible as Cybertruck, these issues can have a bigger impact than many people expect. From an investor perspective, I do not think this is just about one defect. It is a reminder that exciting new products still need strong execution behind them. Now let's get to the biggest long-term topic, Robotaxi and FSD. This is the most exciting part of the Tesla story, but it is also the easiest place for expectations to run too far ahead of reality. We are seeing continued discussion around robotaxi infrastructure, new rollout areas, and FSD-related regulatory progress in Europe. That matters. It shows movement. But I think investors still need to stay disciplined. The key is to ask what is actually becoming more real. Where is deployment advancing? What approvals are real? What is still uncertain? What is operating today? And what is still future narrative? Tesla does not need to prove the full robotaxi vision this quarter, but it does need to show that the roadmap is becoming more concrete and more credible. That is what I will be listening for on the earnings call. There are also a few quieter developments that should not be ignored. Fleet-related sales channels, government contracts, and regional product strategy, including market-specific Model Y variants, may not grab huge headlines. But these moves matter because they show how Tesla is still expanding its reach in practical ways. And sometimes the quieter moves are the ones that matter most over the long term. Not every important Tesla development will trend on social media. Some of the real progress comes through product fit, distribution, and regional strategy. Those things may not move the stock in one day, but they can shape the business over time. So when I step back and look at Tesla today, here is what I see. Near-term numbers look pressured. Some demand signals are clearly weaker. Product execution still has rough edges, but at the same time, Tesla still has pricing power in some regions, still has strategic expansion underway, and still has autonomy as the biggest upside variable in the story. That is why I do not think this is a moment for simple takes. Tesla is not in a clean bullish phase, but it is also not a clean collapse story. It is in a transition phase. There is pressure on the surface, but there is still long-term optionality underneath. And that is exactly why this earnings report matters. Because the real question is not just whether Tesla had a good quarter. The real question is whether Tesla still looks like a company moving toward a future that can justify the long-term investment thesis. So that is what I will be watching today. Not just EPS, not just revenue, not just margins in isolation. I will be watching how management talks about demand, product priorities, and whether Robotaxi and FSD sound more specific, more grounded, and more actionable. For long-term investors, this is the kind of quarter where clarity matters more than emotion. Tomorrow, I will break down the earnings results in full and talk about what they really mean for Tesla stock. So make sure to come back for that. And if you want faster updates in between videos, follow me on X as well, because I will be posting key takeaways there as soon as the earnings news comes out. And finally, Tesla stock is currently around $389, slightly up on the day. That tells you the market is still waiting, and honestly, that makes sense. Alright, that is it for today. If you found this analysis useful, please like the video. And if you want daily Tesla coverage with deeper context, not just headlines, subscribe to the channel. Thanks so much for watching, and as always, let's keep enjoying life in the future. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.